Morning, everyone. My name is Michael Nolan, partner in Grant Thornton in Cork, and welcome to the fourth and final practitioner series update, which unfortunately we're still doing virtually. We thought at the start of the year that we might at the back end of the year get physical events in place, but unfortunately it looks as if we're going backwards rather than forwards, but hopefully with a couple of circuit breakers in the next couple of weeks, we might be okay again in the new year. I just want to thank you all for joining us this morning. And two housekeeping issues I just want to note is that we are recording the session, and as well as that, from a Q&A perspective, if you have questions, can you put them into the Q&A function? And we will attempt to get them at the end. So what we will do is we will run through the presentations first and then address any questions at the end of the webinar. This morning, we're joined by Joe Madden from Innovation Supports of Enterprise Ireland. Joe's going to outline all the supports in place by EI in relation to R&D. Following that, our own James McMahon, tax director here based out of the Cork office, but servicing the entire country in relation to R&D tax credits and KDB, will outline the technical aspect of the tax treatment in relation to R&D. And finally, then we have David Brophy from FR Kelly Patent Lawyers, who will run through the IP protection. Each will take about 10 to 15 minutes, so we should have enough time at the end for questions. If there are any, it is a technical enough session. We've tried to make it as simple as possible, but don't hesitate to ask any questions because it is quite technical. So again, thanks very much for joining us this morning, and I'll now hand over to Joe Madden of Enterprise Ireland. Thanks, Joe.
Hi, thank you. Yes, as James just explained, my name is Joe Madden. I'm working with Enterprise Ireland on the in-company supports. And just to say a little about Enterprise Ireland, it's a wide-ranging organisation. I am focused on R&D supports, but Enterprise Ireland has a lot of other activities, and R&D supports is normally very important, but it isn't always top priority. And at the moment, if you speak with our DAs and development advisors and commercial advisors, they will be focused perhaps on the Accelerated Recovery Fund or perhaps on the Sustainable Enterprise Fund. And these are systems that put significant amounts of money into companies. So if you look at my presentation in that context, it might make more sense. So this is when, if you're looking for R&D supports, it's a good question you need to ask yourself is, where do we start? And if you have a good relationship with your development advisor, then that's by far the best place to start. But not every company, and certainly a lot of small companies, probably don't even know who the development advisor is. If your company or the company you're advising is competent and feels comfortable going straight onto our online application system, this is the fastest way to do it. You fill on the form online, you submit your grant, and you get acknowledgement straight away, and within maybe 6 or 8 weeks, depending on what you're applying for, you will get an approval. The other way of approaching this, well, I'll talk in more detail in the next slide, is about outline proposals. But just to go look at this slide, if we go to the bottom right-hand slide, the end result is you want to get a grant, whether it's for an R&D project, which is expenditure greater than 300,000, or an agile project, expenditure less than 300,000, that's where you want to end up. So you go through the online application process, that's necessary. There's also the exploring innovation, which helps you refine your ideas before applying for the full R&D. This will also allow you to do market research, which none of the other R&D supports offer that help. So it's a good place to start. And then a further place, if your issue is around, rather than markets, around technology, then you can talk to your local university or Institute of Technology and ask them to apply on your behalf for an innovation voucher if there's some technical issue you want to look at. To go on to the next slide. I hope. Yeah, it's coming up. anyway, it's taken a while to come up. Sorry about that. But basically, this is the outline proposal. And from my point of view, if you don't have a good relationship, or you're not familiar with your development advisor or your local LEO advisor, and you just want a place to start, am I going to get funding for this project? And this is the best place to start. What it basically does, it sets out in block form the criteria you need to meet, i.e., is the project being done in Ireland, and is it being done in-house? Now, if to comply, you have to have 60% done in-house and a minimum of 50% done in Ireland. So it gives us an indication straight away whether you're approvable or not. So then you also has to contribute to the company's growth. So it doesn't really matter whether it's profit, exports, employment, but there has to be some level of growth, otherwise it can't be funded. Then the bottom line there, you will see it's an outline of the company's financial position. And there's two issues here. The company needs to be trading, so there must be some level of revenues. And the second thing is the company needs to be EBITDA positive. And then if we look at the left-hand column of blocks there, there's an issue there which is called objectives, which is probably self-evident, but there's technical uncertainties. And if there's no technical uncertainties, the project can't be supported. So if you complete, or if your client completes this form, sends it in directly to us, we normally reply within the day, but certainly within 2 days. And they know straight away, yeah, this is a runner or it's not a runner, and then they can proceed to the application process. Press this. Okay, then just to talk in some overview about the financial support. The Exploring Innovation, which is where you investigate the markets, that's basically 70k maximum expenditure with a 50% grant. The funds themselves, that's both the Agile Innovation, the large R&D, depending on the level of expenditure. The grant rates are 45% for small companies, 35% for medium, and 25% for large. The IP strategy support, which is an offer we introduced 2 years ago, so that gives 80% for expenditure on a consultant for 3 days, 80% of that grant. So it's about €300 for the client to pay. And it's a very worthwhile exercise, even if they don't intend to do any IP protection. You get an overview of where they stand, how they might protect what they are developing. And then if they want to get into more detail, have, say, a specialist involved within the company in IP, then they can get a 50% grant and expenditure up to 70k. And then the last issue there is the innovation voucher, which is paid to the higher education institute, and it's paid on the client behalf. So the client doesn't apply for that. There's two other areas of technical support. They're on process or business model development. And the first one is focused on digitalization, because Enterprise Ireland sees there's a huge need for companies to move, or at least embrace, the digital future. So we're offering a 9% grant with no expenditure on by the client, and basically getting a consultant in to say where you are in terms of your digital path, what the options are, and how you need to progress. So that's just, someone would say it's a no-brainer, because if you have any interest in developing your business for the future, you need to do it no matter what sector you're in. The second one there is Agile Innovation Fund, which also supports business innovation. So you get 50% grant support up to 70,000. So that's basically a 35,000 grant. It could be your digitalization process, but it can also be for any other process development or service or business model development. So to finish off with the contact page, so as I understand, this will be circulated. So do contact us. All of the connections are there. The website does have the link to the outline proposal. So I leave it at that and give up control, I think, if I
have it there, Joe.
Oh, okay, right, thanks.
No problem. Thanks a million, Joe. So just a quick introduction, as Mick outlined earlier, my name is James McMahon and I'm a tax director based out of the Cork office here, and I lead the national practice when it comes to R&D tax credit claims. So what we do is we go into companies and clients, help them identify qualifying projects, and then work through the whole process with them right through to a submission of an R&D tax credit claim and defending the cases then if revenue do come and ask questions along the way. As part of that, and an extension over the past number of years has been the knowledge development box, which I'll touch on shortly. But I guess just to highlight what the presentation really is about, we've a lot of clients that engage with Enterprise Ireland, and then they also claim R&D tax credits. And then once the R&D created, they have IP which needs to be protected. So I think the purposes of today's presentation is really to capture all of that actually does happen within the industry and bring it into one place. So I hope you get some benefit out of today's presentation. So how does the R&D tax credit work? I'll kind of talk about this quite high level to begin with, and the administration of the R&D tax credit. So you get the R&D tax credit is effectively a 25% tax credit on qualifying expenditure. So if we were to use an example here, if we had a company or a client and we could identify a qualifying project or a number of qualifying projects, and we could allocate 400,000 euros of expenditure towards those projects, we would then be able to claim a 25% tax credit based on that expenditure, which would give rise to 100,000 euros of a tax credit. So that's it rounded out, in a real life example, or you can scale that up or scale it down depending on the size of the organization that you're working with. So when you have the 100,000 euro tax credit, there's different ways in which you can use it. Number one, you can use it to reduce any corporation tax liabilities that the company may have. So that's an instantaneous advantage to a company that is profitable and has a tax liability to offset the credit against. However, a large proportion of companies that we deal with are in a loss-making position. They're going through a growth phase. They're making losses, and they're taking on funds, and they're just constantly expanding and growing. The tax credit is very valuable to those type of companies too, insofar as that you can get the tax credit back from revenue by way of a cash refund. So in the example that I've used, if you have 100,000 euros of a tax credit, but no tax liability to reduce it by, you actually get that 100,000 euros back from revenue by way of a cash refund. Now, a lot of clients have asked me over the years, why is it called a cash refund if we haven't paid any corporation taxes? In effect, it's linked to the employment that the business creates. So this is linked to the payroll liabilities that the company has. So in effect, you're actually getting a refund of the employment taxes that the business has generated. So there is that correlation between employment and the refund that you'd receive from revenue. Now, just to caveat and highlight one thing here, when we look at cash refunds, in the example that I used, if you were in a loss-making position and are due to get 100,000 euros of a tax credit, you don't receive all that money in one tranche. The money is actually divided up into thirds. So on the first corporation tax return that you'd file for your company, you'd get 1/3 of that 100,000 euro back from revenue. And then the following year, when you file your corporation tax return, you'd get the second third of that tax credit, and then potentially the first third of a follow-up R&D tax credit claim. So it's important to note that you don't simply get it all back in one tranche. So then moving on, the tax credit is in addition to the trading deduction. So for any accountants on the call, on the continent, they have R&D regimes to encourage R&D. Like, so if you look at Denmark, Spain, Norway, the way they encourage companies to undertake R&D is to offer a super deduction. So you'd be getting your tax deduction through your P&L as per usual, and then they may add on an extra 5% of a deduction to encourage R&D. So that's the way they operate. However, in Ireland, the way we do it is you can claim your deduction as per normal, and then you can also claim the tax credit on the expenditure that you've claimed your deduction on already. So when the IDA go abroad and they when they talk about tax to potential clients, they look at 12.5% tax rate, they look at the IP allowances, they look at R&D, and when they look at R&D, they say you can get a deduction for your R&D expenditure here of up to 37.5%, because you're getting it at 12.5% through your P&L, and you're getting the tax credit then at 25%. So that's just an important differentiator from other regimes around Europe in particular. And then finally, there is a key employee reward mechanism here. So it's not used greatly by companies. There's set criteria in which you need to overcome to be eligible to claim it. But in effect, what this does is it offsets the corporation tax liability that the company is eligible for, and it can move it onto the income tax. It can move it to an income tax credit for key employees working on R&D within the company. So this is quite valuable for rewarding key staff and holding on to key staff, because it's a very competitive market in the industries that we'll be looking at. And this is an option of remunerating the key staff that work in your R&D projects. Now, one big caveat here, and one of the criteria that you need to have in order to offset the corporation tax credit to an income tax credit for one of your employees, is that the company needs to be profitable. So if you are in the cash refund position, you can't avail of this relief in terms of the key employee reward mechanism. So that's just an important point to note. But if you do have a profitable company paying corporation tax, then this is a route that you may go to reward staff. So that's the high level overview: 25% tax credit, inclusive of a tax deduction, and the different ways in which you can use it. Then when we get into the technical piece around, what is a qualifying project, what do revenue look for, this slide will go through it in some detail. So I'll start with the bottom left-hand bubble here, and it's that the project that the company is undertaking must have a scientific or technological uncertainty. So when I'm talking to clients, this is one of the first questions we need to overcome in order to make sure that we have a qualifying project. And then once you have a qualifying project, then you can start allocating expenditure towards it, and then you make the claim and all the admin that goes along with that. But the very first question that needs to be answered is, what is the technical uncertainty, and can we narrate that and document it? Because in the event of a revenue audit, this is one of the first questions that they will ask, and they will hone in on it to make sure that there is an uncertainty. Because if there's no uncertainty in the project, then you don't have an R&D tax credit claim. So that's the starting point for all projects, and then each project lends itself to being a qualifying R&D tax credit claim. So if we can identify that uncertainty, then the uncertainty then it kind of spins off into seeking to achieve a technological or scientific advancement. So your technical uncertainty tends to lend itself to the advancement then that you're looking to achieve. You're looking to overcome that uncertainty and create an advancement in the technology that you're creating. So that's kind of your A and your B. You start with the uncertainty, and you're looking to create something new and innovative and overcome the uncertainty to create an advancement in the field of science or technology that you're working on. So they're two very important questions to ask clients, or ask yourself if you're a business owner. Where is the uncertainty? If you can document that uncertainty, then you have a project, and we can get into the good stuff around what type of expenditure qualifies. If we look at the uncertainty and the advancements as being your A to B, if the top left-hand bubble here is that the R&D needs to be done in a systematic nature. And what that means is that it needs to have some logical link between the uncertainty and the advancement. And what revenue like to see here is that you're documenting the R&D that you're undertaking. So if you've journal entries, or if you have a project management tool such as Jira for tech companies and so on, identifying the work that's carried out on an annual basis, that's very important when it comes to a revenue audit. So it needs to be done in a logical manner and in a systematic manner, in which revenue can say, okay, they're making progress from the uncertainty to the advancement. And also, a lot of clients we'd work with would be working on large projects, which would span several accounting periods, whereby the uncertainty would remain throughout. So this could drag on for 2-3 years. And the uncertainties can remain in each of those write-ups or questions that revenue may ask, but then the work actually carried out each year would need to change. You do need to show revenue that it's, there's constant R&D taking place on this project, and you're constantly looking to achieve what you've set out to achieve. So that's your A being your uncertainty, B being the goal that you're looking to achieve, and then it needs to be done in a logical manner to link between the two. And then finally on this slide, what I'll touch on is that it needs to be in, the projects that we're looking at needs to either be basic research, applied research, or experimental development. So a lot of businesses feel like an R&D tax credit claim is only eligible if you are doing basic research. So, real theoretical type of stuff, or if you're in software, if you're writing a new language of code or something like that, all of that stuff qualifies under basic research. But in reality, only 5 to 10% of claims are made in that on that basis. The majority of claims are made in applied research, or in particular experimental development. And what experimental development is, that you have competent professionals within your organization that are highly qualified and have industry experience, and that they take that knowledge and then create and develop something new or innovative. That type of work is where the majority of R&D tax credit claims are made. So, this is an important takeaway. You don't need to be splitting the atom to claim R&D tax credits, nor does it have to be incredibly theoretical. You just need to have experience, and you need to be innovative, and you need to have uncertainties, and that type of work will qualify for R&D tax credits, and that's your project. And then we can move on to expenditure. So as I said, once you have your uncertainty, you're at the beginning of a project, and then we can start looking at allocating costs against it. So the costs that you can allocate, and one of the biggest ones tends to be employment costs. Employment costs are fully loaded employment costs. So it includes employers, PRSI, bonus payments, health insurance, and various costs such as that. So these can be quite chunky, and you can claim a percentage of those costs as part of an R&D tax credit claim. And that tends to be the biggest bucket of expenditure. Now, it is important to note that revenue do ask for timesheets here and some level of documentation. And I guess that's something that we can help clients with too, in putting together proper processes in order to make sure the documentation is in place in the event of a revenue audit. And the next bucket of expenditure would be on plant and machinery. So to give an example of something that pops up quite a lot is a tech company who employs a new member of staff to undertake software development for them. If they buy that employee a laptop, say for €1,000, and say that employee is going to work 50% of their time on qualifying R&D, then you can put in a claim of €500 towards that laptop. And obviously you can scale that up to be, an actual piece of machinery if you're working in a more physical engineering type of a setup. So plant and machinery qualifies, or at least a percentage of the plant and machinery CapEx spend that you'll incur qualifies. Buildings can qualify, but this is more your greenfield site in where you'll develop an R&D center of excellence. So we don't come across it too much, but it's definitely part of the R&D tax credit regime, and it's important to note. Materials qualify. So if you're building a prototype then that's not sold on to the end customer, any materials associated with that prototype would qualify. Or if you're working in pharma or food and beverages, if you're running materials through the line in order to carry out R&D, and then those materials have to be disposed of, then the cost of those materials would qualify then as well. Overheads can qualify, although overheads have been narrowed quite substantially over the years. Even as of last year, rent used to be, clearly an expense that could be claimed, and revenue have curtailed that and pushed back and said that rent cannot be claimed anymore. So you're really limited on the amount of overhead spends that you can claim to light and heat and power consumed in the process of R&D. And then finally, outsourced R&D can qualify. So if you're working predominantly on a project and you outsource a portion of the project, then you can claim that cost. Now, there are caps in place there to make sure that the company itself is incurring the majority of costs, but it's important to note that you can claim outsourced R&D activity too. So if I flick on to the next slide, just quickly an example of a case study. So, you know, I've used the example of 400,000 euros of qualifying expenditure. And to get there, you need to identify the project. You need to be able to be comfortable in narrating the scientific uncertainty, documenting the R&D that takes place. And once you're comfortable with that, then you look at the numbers. And this is how it can kind of escalate into being quite a substantial claim. So in this instance, you've 330 grand worth of wages, you've the 5 grand of laptop costs, or any capex for that matter that would be associated with the R&D. You outsourced 65 grand worth of subcontracted activity, which will give you qualifying expenditure of 400,000 euro. You get a 25% tax credit then based on that, 100 grand, no tax liability, you'll get the 100 grand back from revenue then by way of a cash refund. Now, just important to note, given Joe's presentation, any expenditure also met by way of grant funding would need to be reduced from an R&D tax credit claim. So for instance, here, if we had qualifying expenditure of 400,000 euro, but Enterprise Ireland had given you an R&D grant of 100,000 euro, you'd have to just simply deduct the 100,000 euros from your 400,000 euro and then claim the net at 25% then as by way of a tax credit. So that's important to note. So that's the R&D tax credit covered, and I'll just spend 5 minutes now in the knowledge development box because it's a regime that has not seen a huge amount of uptake to date, and there's various reasons for that. I think the main reason being the complexity and the unknowns around how it actually operates and is being administered. It's clear enough in that if you have R&D and you have a qualifying patent and you're profitable, you can make a claim, but even the accounting of the profits allocated towards this trade is quite cumbersome and unknown. And I do believe that shortly they will be issuing, as in Revenue will be issuing new guidance around how the KDB should be applied and how it should be claimed. But at the moment, there haven't been too many claims in this area. And the ones that we have made, we are in communication with Revenue to get them over the line. And there's a lot of over and backs with Revenue through the process. So it is a bit cumbersome, but it is part of, the IP regime that Ireland has. So what is it? It's an effective tax rate, so it's not a separate tax rate of 6.25%. It's an effective tax rate of 6.25% given the deductions that you can claim. So it applies to profits arising from certain IP, which are the result of qualifying R&D carried out in Ireland. Qualifying IP assets are patent inventions and copyright software and KDB certificates as well, which was its KDB certificates can be claimed by SMEs, and it's to encourage companies to develop IP in Ireland that have a high value add for the economy. So this was brought in a couple of years ago. The R&D tax credit, you should look at it as in that's there to support businesses that are undertaking R&D, but we didn't have anything in place to support the commercialization of the IP. So this was brought in then to encourage the commercialization of the IP in Ireland, and it gives a favourable tax deduction. So how it works, basically you need to be undertaking qualifying R&D, and qualifying R&D being the definition that Revenue have, and that's the scientific uncertainties that I've mentioned and so on. You then need to protect your IP, which David will speak to just momentarily, and that can be done various ways, and I'll leave David explain that in more detail. And then you need to be profitable because it's a deduction from your profits that you'll identify here. And then once you have that, the profits from this trade that you've created, and that's important, it's a trade that you're generating from this IP. You have to create a separate trade. So you need to strip out income and expenses towards that trade and then have a profit at the end of it. And then it's that profit that is effectively taxed at 6.25%. So just quickly, this is my final slide, a quick example. You have an Irish business, it incurs 500,000 of R&D, so that ticks the box of being an R&D company, it has profits of $1 million. That ticks the box of being profitable. It would an extra tax deduction of 500,000 is therefore available. Without the KDB deduction, the corporation tax liability would be 125,000 euros, effectively your $1 million multiplied by the 12.5% rate. However, with the extra deduction of 500,000 euros, your effective tax rate is 6.25%. You'll be paying 62,500 worth of tax. So look, it's a really good initiative. It can be potentially very valuable to companies, but it is a little bit cumbersome at the moment. But I guess you know, a takeaway from this slide would be that I'd be more than happy to have a conversation with anybody who'd like to explore this in more detail, and I can go through scenarios in much more detail than what we have time for here. So that's my presentation. I'm going to pass you over to David, who I think will round out the presentation quite nicely, in that, you know, you've gone through Enterprise Ireland, you've gone through revenue and the supports that revenue can provide, and now you're looking to actually protect the IP that you've created through the R&D process. So I'll actually give you control here, David, if you don't mind.
Great.
There you go.
Okay. Thanks very much, James. Well, I mean, James has put the context on this. Our job, we're patent and trademark attorneys, and our job is to assist and advise companies who have done the R&D, or are going through the R&D, or who have created something in their business that has some value, and they need to get some protection around it. And that's what we do as patent and trademark attorneys. So when we look at intellectual property, which is the field we operate in, what does the term mean? Really, it's a collection of a whole load of different individual kinds of rights. You know, you can see trademarks, patents, designs, copyrights, and there are a few others as well. But all of those are distinct legal rights that are meant to protect different parts of what you've created in your business. And they come under this umbrella term of intellectual property. Our job when we speak to a company is to try and figure out what have they created and which of these rights applies. And usually it'll be more than one, and to give advice as to what the process is. So there's obviously a lot covered in these different fields. So I'm going to give you a kind of a whistle-stop tour through trademarks, designs, patents, and obviously there may be questions beyond that we can talk to you about. So why would you want IP assets? Before we look at the actual rights, the raison d'etre of IP is to give you protection. So it's to stop people from copying what you've created. And you know, there's a deterrent value in having intellectual property, to have a patent or have a registered trademark. But beyond that, it has a lot of business uses and business values. You may find that you can't, you're not in a position to exploit what you've created in a particular geographical market or in a particular technical market. And if you can identify someone who can exploit it on your behalf, you can license it to them. But you can only license it if they have a reason to pay you a royalty. And if you don't have any IP protection in place, they have no reason to pay you to use what you've created. So giving yourself IP rights gives you something of value that you can license. As James has talked about, you know, if you want to support a KDB claim, you need patents or copyrighted software. So it obviously has a value in that kind of tax relief. For R&D claims, our experience is that it can also be very helpful, even though IP is not a requirement for an R&D claim. You know, James's slides talked about how resolving technical uncertainty. If you can go to revenue and show them that your invention, your developments have been granted protection by the patent office following an examination process, that helps to support your case that what you've done really is innovative. So they can help you with that, even though they're not a formal part of it. The last 2 points, and one of them, it's got a little messed up on the slide, but building up assets and attracting investment or purchaser. Often companies find that the IP that they have, what they've created, it's not reflected properly on their balance sheet. There's not enough value put on the business because they don't have all of these intellectual property rights itemized and valued and recorded. And having tangible IP rights and registrations gives you something to put a value on. And that helps you not only to beef up the value of the company if someone is coming to invest or you're looking to sell the business, but also to demonstrate that the business is innovative and has an X factor different to its competitors. It has something of value that competitors can't copy. So there are all these reasons, and usually a company will have several of them for getting IP. Your IP rights, usually it's not either this or that or that. It's not a trademark or a patent or a design. Most products will have entitlement to have different IP rights. So if we look at this product here and you ask people what it is, 9 out of 10 will say it's a Dyson. And that's obviously the trademark that they have. That's their brand. The reason you know it's a Dyson is because they've put a lot of thought and work into how it looks. So the external appearance of all of the components of this give it a particular look, and that's protectable as design rights. And then forgetting about the outside of it, but what's on the inside, how does it work? There's obviously a lot of technology in there that's protected by patents. And something like this won't just have one patent and one design. It will have probably dozens of patents for all the different parts of the technology that are built into it. All of those trademark, design, and patent are registrable, meaning you can go to the patents office and get a registration certificate that says you own it. Beyond that, there's also copyright and know-how or confidential information that's usually baked into a lot of products, and they're unregistered rights, which means obviously you can't register them, but you do have to take care of them. You've got to put in place good processes to make sure that they're not squandered and that people don't walk away with what you own under copyright and know-how. So I'm going to run through trademarks and designs and patents, and I'm starting off, given the audience and our hosts being from Grant Thornton's Cork office, with a good Munster trademark. We helped Kerry with the rebrand of their Charleville cheese range. And this is a good trademark. It's something that's very distinctive, it's immediately recognizable, and very easy to protect. So when we look at trademarks, it's important to be aware that you can have registered trademarks and there are some unregistered rights, but it's important to understand why you want to get a registration for your trademark. If you register your trademark, then it's immediately clear, the whole world can find out who owns the trademark. The whole world can look up the trademark registration and understand that you have exclusivity in it. It's something you can, if someone copies it or uses a trademark that's confusingly similar to it, you can immediately enforce it in court. So it's a very strong and definite right. You can have unregistered trademark rights, which you can use to stop people from copying you, but they're much more uncertain. In Ireland, what you would do is you would accuse someone of passing off, and you would take an action for passing off if you think they have come too close to you and you haven't registered your trademark. But there's a real problem with that, especially for young companies and for new brands, because in order to have any unregistered rights, you have to have a very strong reputation in that brand. And by definition, for a young company or a new brand, you don't have any reputation with the public at large. So getting a registration is a way of getting strong rights at an early stage. It's also, there's some confusion about business name registration. Sometimes companies will get the business name registration and think, well, that's my brand covered. It's not really, because a business name registration doesn't give you any right to prevent other people from using a similar brand to yours. It's simply a record that you're intending to use that name in trading. So the gold standard really is to get a trademark registration if you want to protect your brand. When we look at what you can protect, the main strongest brands that people have generally are the name that they have. That can be words, letters, and numbers. And obviously all of these are immediately recognizable. A very important feature of all of these, world recognized brands is that they don't describe what the company does. They don't describe what the product does. Most of them are invented words. like Toyota or Google or even Coca-Cola. And the ones that aren't invented, like Penguin and Apple, are words that have nothing to do with the products that they protect. And that's a really important factor, which I'll get back to. But you want to pick something that is distinctive and doesn't describe your products. The other main category of trademarks is logos. And that can be purely graphical symbols like the Apple symbol or the Vodafone logo, or it can be a stylized text like Coca-Cola, IBM, or it can be a combination of the two. They're very, very strong trademarks for protection, and they're usually the second thing that you want to protect after getting the name registered. What can't you register? Well, what you really have to steer clear of are trademarks that are not distinctive for your product. So if you've got something that is generic or descriptive or very commonplace in the field, then you won't get a registration for that. So Apple is a great trademark for computers and it's a terrible trademark for food products. You won't be able to get any protection around it if you're using it in a descriptive way. It's something that a lot of startup companies are tempted to do, which is they feel that if they don't pick something that describes their product, then it'll be hard to market it. But in fact, it's really the opposite, that if you pick something that's very distinctive, you can get very strong protection in place. And you want to steer clear of having something that's descriptive or commonplace, because you'll never get any protection for it. The procedure to register a trademark, usually the first thing you want to do is get clearance. Make sure that you're not infringing anyone else's trademark, that you can get this for yourself. Then once you decide on which goods and services you're going to use it for, we can apply to register it. Usually you start off in your home countries. You do it in Ireland, in the EU or the UK. And then as time goes on, you can expand it out into other markets as you expand your own markets. And trademarks will last forever. So every 10 years you can renew it. But there are trademarks that have been on the register for hundreds of years and they never run out, unlike the other IP rights. The next one is designs. Designs, this golf glove, it doesn't work any differently to any other golf glove, but the only thing unique about it is what it looks like, and that's protected. So design rights are available for the appearance of products. You do have unregistered design rights, but they only last for 3 years. So after 3 years, anybody can copy your product's appearance unless you get a registration. So that's why registrations are very important. Registrations will last for 25 years and they're much stronger. And designs are, compared to other forms of IP, relatively inexpensive and very quick to get. Traditionally, designs were for the appearance of physical products. And so these are, examples that would be immediately recognizable. But more recently, you can also get designs for digital designs. So the product is the logo, or it is the graphical user interface. And all of these things, the design system has evolved to give you protection for that. The procedure, whether it's a digital design or a physical design, is very straightforward. We get images of what you want to protect, we put it into the patent office, and we get a registration. And as I say, we can get these registered in days or weeks, as opposed to patents, which usually take a couple of years to be examined. Designs are quick and cheap. Then talking about patents, this is a patent for a cattle shed. They can be, all areas of technology are covered. This is a client of ours, Easy Fix in Galway, that has, they make cubicles for cattle stalls, and they have a lot of innovation in there. And it's a way that they distinguish themselves from everybody else who makes cattle stalls. So they're available for products or processes. You must have an invention. It must be something technical, but it can be in any field of technology. And we have people working, in all areas. We've got specialists in software, electronic engineering, through to physics, chemistry, the life sciences. The only thing you must have something technical. If you've got a purely abstract idea or a business method, you can't get a patent around it. We must have something technical, and that's something we would examine and advise on before we'd apply for a patent. And the two main criteria are that it's novel, which is that it's not already out there, either from you or for anyone else, and that it is not obvious. That means that it solves a technical problem. Now, James said, you don't have to split the atom, in terms of showing innovation. It's the same for inventive step. Not obvious means that you can't obviously put what's already out there together to solve the same problem. So it's not an enormously high bar. There's obviously, you know, thousands of patents granted every day for very small advances. So usually we would advise people to look at, have you solved a problem? Have you done it in a novel way? And if so, then we would look at trying to apply for a patent for it. The most important rule for most small businesses is not to disclose or sell the product to the public before they file for a patent, because any disclosure by anybody, including your own, is going to kill your patent before you ever get started. So that means you don't sell it, you don't publish it, you don't put it on your website, no verbal disclosures. You've got to be very careful about public use and public testing. Once you file your patent application, you can do all of these things. So even though a patent takes a few years to be granted, once you get it filed, you can immediately put it on the market and start selling it. It's the filing date that's crucial. So, you know, this slide tells you the same thing, the trials and sales and public uses. If you make it available to the public, then you can't get a patent. You can disclose your invention, and you often have to disclose your invention in confidence. I say it can be risky. It's as risky as the person you disclose it to. If you have someone you trust, like your own advisors, your accountants, your lawyers, and so on, that's all fine. Enterprise Ireland, you can tell them what you have, it'll be in confidence. You want to trust the person before you disclose it confidentially. You should only disclose it under an NDA if that's possible, because that puts it makes clear to the person that they're not allowed to disclose it. It gives you some teeth if they do go against that. And you should always try and disclose as little as possible until you file. So the high level steps that companies would go through when they're deciding to talk to us is, you know, do they have something technical? Make sure it hasn't been disclosed. Can they at least make a case that they've solved some sort of a problem with respect to what's already out there? And if all of those tests are passed, then, you know, they would talk to someone like ourselves, and we would take them through the process to get a patent. Just some final points that we would make when we're talking to companies about whether they should apply for IP, what should they do? One of the most important things is not whether you file or not, but that you make a good decision and you make a conscious decision, that you don't let the opportunity pass, that you don't disclose it and then find that you can't protect it. So, you know, making conscious decisions and getting some advice is important. You may decide that you don't want to, I've said it doesn't commit you to enforcing it in court. You may decide you don't want to get IP, but you always have to have an eye on what your investors, what the business owners or the future business owners may want. They may expect you to have IP. And so sometimes you may say, well, we will never enforce this. We will never want to sue anyone, but we will get it for that reason. I'm sorry that the slide has jumped on, but what the final thing was, please talk to us if you have any questions. We'd like to talk to you about it, and you know, we can pick up the phone at any stage or get on a Zoom call with you and give you some advice on IP. So that's the end of my presentation. Back to you, James.
Thanks, David. Apologies, I hit the screen and flipped you on for the last slide. I didn't realize.
Okay. I can take a subtle hint anytime.
I genuinely, I didn't mean to do it. But no, thanks very much, David. And I do think it rounds it out well in terms of starting the journey, perhaps with Enterprise Ireland. And as you said, you can have those conversations with Enterprise Ireland or your advisors, and then still get your IP patented and protected in the future. So, yeah, we'll pause for a second. If anybody has any questions, please share them in the chat box. And perhaps Valerie, you might have more access to the chat box here than I might.
Yeah, there's no questions in, but Aidan O'Donovan has his hand raised. I might just unmute you, Aidan, if you want to ask a question.
Perfect. Work away, Aidan. Aidan is still on mute if you're speaking.
Yeah, he's still on mute there, James.
Yeah. That's no problem. Look, if there's no questions, and if Aidan might be away from his laptop perhaps, but but we will be sharing these slides, and our contact details will be on them, are sent through. They'll be sent through on the on the CRM that you would have registered through. So if you do have additional questions then thereafter, feel free to reach out on our contact details. And I'd just like to finalise by thanking Joe from Enterprise Ireland and David from FR Kelly for participating in today's session. I just think it's a very useful session for people who are undertaking research and development, and it's not often that you can kind of bring it all into one session like we did today. So I hope everybody on the call got something out of it. As I said, feel free to reach out and get in touch with us for any questions you may have. And thanks for logging on today, and enjoy the rest of the day, and talk soon. Thanks very much.